joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within.
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you ask the questions and we give you the answers to all things investing and trading. Now tonight we're going to explore the best stock selection criteria and strategies that we personally use. We're going to do this to help you so you'll know how to buy the best stocks to suit for your portfolio. We'll also look at what happened with the sectors and indices in the Australian stock market last month and give you our thoughts on where you might find the best opportunities moving forward. Now we'll also analyse stocks that you select and answer your questions as usual, along with a whole lot more. Now I'm Janine Cox and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators.
Hi everybody, and welcome to what I think is going to be another awesome show. Now, before we get into your stocks and the market and we're tearing them apart for you, remember the chat box is off to the right of your screen, so get typing and get those fingers warm, ask your questions and we'll get to as many of them as we can tonight. So, welcome.
Thank you. Welcome to you too.
I know it wasn't a busy day trying to get ready for the show. We hardly even saw each other, even though we're like 2 metres apart, and Janine and I were like ships running around in the night and we kept missing each other. So we're going to wing it a little bit tonight, aren't we?
Yeah, we had so many inquiries actually.
You did.
So I was flat out answering a lot of emails and responding to applications that people
I know,
sent
I had
in.
a lot of people I was helping out today, and our website nearly blew up, I reckon. We've had that many people on it. So, and a lot of emails coming through supporting some of our students.
And you're looking rather well tonight. You sound a lot better.
I am getting a little bit better.
You've lost your sexy voice though, haven't you?
I know, I went to the Mind, Body, Spirit Expo in Melbourne on Saturday. So if you went there...
I'm impressed.
I know, isn't that good for me? And I tell you what, the ratio of girls to guys was about 90%.
That's why you went.
So I reckon if you're single, guys, just go there. There is just, and me walking around, and I did a podcast on it yesterday, on what my take was, but walking around as a guy, nobody wants to talk to you on the stands. They don't think you're serious. They don't think I'm serious. I'm going to buy anything.
Well, I was lucky you had your better half with you then.
Well, yeah, my wife helped me spend. I think we left enriched and a little bit poorer.
Oh, okay.
So from all of that.
Well, look, we better get moving on tonight's show. And first up tonight, we're going to take a look at the sectors and the indices in the Australian market, what they did last month and what we think they may do in the coming months. So let's get into that, shall we? Now up on your screen there, you should be able to see you've got the list of sectors there. Now we've done this before. We went over the sectors, I think it was a few weeks ago, and we were just wanting to give you an update on what's happened with some of the most popular sectors. Particularly, I mean, energy and materials generally are quite interesting. Look at the energy sector for 2018, it was down about 11% and materials was down 2.3%, so that you can see that energy is XEJ, that's the code for the energy sector. Materials is XMJ. Now looking across to the right hand side, this is actually as at the end of the month in May, it shows 30th, but pretty close to that anyway. So 17%, it's up. Materials has gone from minus 2.3 to 17%. Energy's actually gone from minus 10.8, say, and up 10.25. So those are the sort of sectors that can move really quickly and change from one year to the next quite significantly. So I always have those on my list. And same with healthcare, that's another big one. They call it a defensive sector, but it doesn't mean that this sector won't drop at some point. It's had some good runs. Look at 2018 up 17% and a 12% rise so far for the current year, that's year to date. So looking down further, I'll just skip the top two because they're a little bit on the boring side, I think, because they haven't done as well as some of these other ones in turning around. But look at Infotech, gone from 5.5 to 23.5. So it really goes to show that you can't judge, a stock or sector of the market by what it's done in the previous year. If you're only looking at that in isolation, and we've talked about that before, how it's really important with stocks or markets or sectors to look at what they've done over time. And Dale mentioned once before about if you see a pattern unfolding, you might have a couple of years in a row where the sector's been really strong and then the following year it's down, and it might repeat that. Or it might only have 1 year every so often where it's down, and after that you get a few good years. That's what's really important to have a good look at. But look at the telco sector, minus 23%, up 32.46. Now, if you look at some of those telco stocks, they'd fallen so significantly you'd want to see them actually, make some gains. Because we're not just talking the 25% in 1 year. I mean, some of them have been falling for longer than that. So it's important to look at the big picture. That's why we get you to look at the monthly chart on the show. And the utility sector, minus 10% and up 8%. So there's another mover there. Often some of the small stocks in the utility sector can be quite interesting, but there are a couple of good stocks in that area as well.
So what sector do you like, actually? Probably good.
Look, I mean, I always follow materials. That's one that I generally like, regardless of what's happening. Even if they are going down, I'm just keeping an eye on them constantly. So I do like that sector as one to watch out for. I think across the board, they're all up this year. So, I mean, I'd be looking at that. I still go look for healthcare, energy, materials, and industrials is an interesting one because they used to always say how if the industrial sector is doing well, then you know that everything's going to move.
Everything's doing well, yeah.
Yeah, so that's
And
one to watch.
well.
So those ones generally I like to watch pretty regularly.
Cool. So what else have we got? So we're going to look at back to Optima again. And
Yeah.
we're looking at a spaghetti chart.
Yeah, so this is one of our favourite foods, isn't it, spaghetti?
I love spaghetti.
Yeah. So we've got what we call a spaghetti chart. Now, when you do the course, we teach you how to look at the different sectors because this is part of what's called top-down analysis and looking at which sectors are currently performing well. And you can see it here. Like, it's just nice to look at a graph rather than just look at the numbers only.
Sometimes the numbers can get confusing, can't they?
They can. So the codes you've got up here. So you've got the telcos up here. You've got info, technology just below. But you can see it's really the angle we're looking at. So how fast they're rising and, are they likely to turn? We talked about the RRG graph, or you discussed the RRG graph in one of our previous recordings.
We did?
No, I thought we did talk about it briefly. I think.
No, I thought we kept that a secret.
Oh, is that for a later show? Is it?
I didn't even say that either. But,
okay, so maybe I've let the cat out of the
maybe
bag
you
there.
have.
Okay, but looking at this, you can see healthcare's just been going really nicely. Materials is flattened off a bit. You can see it's just the angle of this line. The All Ords has got a nice steady incline to it. And
you'd expect that too, because it's a smoothing of all of those sectors.
Yeah, it is exactly a good way to describe it. So the discretionary sector is sort of following that angle almost of the All Ords. And so therefore you could expect that if discretionary followed it over time and you were able to see that happened, then, it's a reasonable, I wouldn't want to say bet, but it's a reasonable probability that it's going to continue to do that. So we've got financials, and looking at this point in time, I think down at the bottom energy, I've just skipped a couple, which is flattened right off because of what's happening at the moment with oil. So looking at these, I mean, right now the healthcare's pointing out really strongly, the telcos are pointing up really strongly, and the discretionary is doing quite nicely.
And that's where you're going to find the stocks
financials.
that are rising, and that's what Janine's trying to get at, is that's where looking at these sorts of things, you're going to find out where the stocks, in what sectors those stocks are in, find the sectors first, which is top-down analysis. Look at the bigger picture look at what the market's doing as a whole, what indices are moving, what sectors are moving, and then bring it down into the stocks and look at specific stocks for your portfolio. And that's all about the subject that we've got from tonight. But
and there's more than one way to do top-down analysis, so we don't just talk about one way. So that's something that
we've got two or three ways of doing it, haven't we? And it all correlates to making sure you get the right stocks for your portfolio. Yep. Now, Janine, we had a lot of great feedback from last week's show, and when we chatted about the biggest mistakes that traders make, and we had, as I said, a lot of feedback. And tonight we were going to explore the best stock selection criteria. And this is in response to everyone's answers to yet another poll that I did, where I asked a question how I'd like to know more about. Now, the responses that I got were that 23% of you said portfolio management is what you wanted to know. A whopping 59%, that's the biggest percentage we've ever got, said they'd like to know more about stock selection. 12% buying and selling, and 2% they wanted to know about derivatives, and 5% wanted to know about Forex or foreign exchange trading. Now, the first three are covered in my book, Accelerate Your Wealth, so I suggest that anyone who has not read it, just get onto our website and get yourself a copy of my book. It's quite easy to get, and we'll shoot it out to you. So.
Now, the poll actually presented another great question. I'm surprised at where you get these questions, but obviously
I just make them up.
Yeah, obviously it's something that you guys want to know about because of the responses that we're getting and the questions that follow on from that. So, and like last week's poll, the results that you presented or provided us are not surprising to me anyway. So when you look at these answers and those from last week's poll, you really get to understand why so many traders fail or are inconsistent.
Very much so.
So also, like last week, all of them can be rolled into one global subject, and that's really a lack of knowledge.
Yeah, it is. It very much is a lack of knowledge. And where I get those questions from is simply because I desire to know what these people are wanting and where they're at in their trading at the moment, so that we can make our show more aligned to what they're needing and what they're wanting. So, and again, we got a comment from Steve. Steve's he's our superstar. Last week he gave us a comment on the poll, and obviously this week he did. He said on the poll, he said, "Hi Dale, I think his English is not good, so I need to teach you English, Steve. I think we all want to know how to select stocks better."
That's but what? Presumptuous. It could just be his typing skills.
It's probably his typing. He's probably not a typist. So,
you used to type with one finger.
Well, when I was young, I actually learned typing because it just speeds up my role. But he says, "Hi Dale, I think I want to know, we all want to know how to select stocks better, but what is the use of that if we do not know how to manage that stock, let alone manage a portfolio that does well?" And that's a really, really good point because it's not just about stock selection, it's portfolio management. And we'll get into that later when we get into the subject.
I think that, portfolio management is the overarching theory.
Correct.
And then the stock selection is just one aspect of that. But it's interesting how everyone goes for the stock selection.
They do.
And that's the focus. Whereas, and look, when I think about a lot of people when they're first getting to know the market and emailing in, that's all you're focused on. Well, how do we select the best stocks?
Yeah, just tell me the best stocks to buy, Dale. That's all I need to know, and that's probably the last thing you need to know. The first thing you need to know is the process. And again, like top-down analysis, like you're talking about, is well, what are you trying to achieve? Go to the big picture, and then slowly chunk it down into. Eventually, stocks will fit that picture.
Yeah, well, what type of portfolio are you going to run? Even that's what you're going to get in tonight in the video, isn't it?
Yeah, so in the video, we'll come back a little bit later and we'll actually show you a video of me putting all of that together for you in our nice little video. But first, I think it's time we had a look at the chat and to get into some of the stocks that everyone has asked us to look at tonight. Now, we've got a couple of questions at the top end, so there's a whole lot of stocks there. But the first question was from Chris G. He said, "Hi guys, I've just purchased RRL, nice supporting monthly trend lines, but I've noticed that its percentage increases off this trend line to the high has slowly been decreasing. Your thoughts, please?" So, as I said, guys, just keep typing your questions down there. If you've got a stock, we will get to it tonight. We hope to get to all of them tonight. That's our plan.
So we're going to do 3 to start with.
So we're going to do 3, and then we got one from Courtney. She says, "Hi, Dale and Janine. I purchased DHG at the IPO, and would love your thoughts on that." So that's our next stock.
All right. So RRL, Regis Resources. Now, interesting stock. Trends well when it gets going. This is look at the monthly and look at some of the volatility that we're seeing there. This part here is where the stock was really illiquid. If you look before, way back in 2001, coming through to this high here in 2004. You can see all the gaps on the chart. That's what I mean by the chart telling you how liquid it was and whether the data is useful or not. Let's go back and just have a look at that on the weekly chart. See how, look at it, this is what you used to talk about.
The fences.
You know, the picket fence. You know, you've got all these picket fences lining up and straight moves across here.
It's
and
almost
here.
like the Great Wall of China, isn't it?
Yeah, you can see that it's not. Yeah, I'm sure that China's
Well,
much
so
stronger
great,
than that one. So looking at this, you can see still a little bit of a liquidity coming through, but then it really starts to build up. And notice how the volume is changing over time, and that's what's telling you that the volume is improving, the stock quality is improving. Much easier to try to analyse a stock where the liquidity is there. So I'll just bring up that monthly again. So nice trends, straight up, straight down, shows that you can actually get a decent run out of the stock and could be good buying opportunity along the way. But right now it's pulled back from its high. So like if you're a person that's has this on your list and you were thinking about buying it at some point, then you would really be wanting to be the lion or the tiger. Remember we talked about sitting there waiting to pounce, but now is not the time, because the stock's right down at the bottom of its monthly bar, not showing any strength at all, in fact showing weakness. So let's have a look at the weekly chart just to compare quickly, and you can see there the current data is showing that it did attempt to rise up to this point here at $4.95, hit its head. Now if I put the crosshair on that I've shown you in previous weeks, you can see across here there's some resistance, so prior peaks, prior tops, and bottoms, and also this area across here. So it really has got stuck in this sideways move at the moment. It's taken out this trough here, which is not a good sign. I'd be really concerned if it closed for the week below that bar. So that's the low is 437. At the moment it's just hovering above it. So here we've got Friday's, that's not the full week this week, so let's have a look. So we've got today's data being Tuesday the 11th, closing low, but not underneath this low yet. But notice how it's just filled the gap. It's pulled back to fill the gap. We need to just give it an opportunity to move. So that's RRL, but I don't like it right now. DHG, looking at this stock, not much. Domain Holdings is the company that we're looking at.
Courtney said she bought this on the IPO, so she's
now there's not
obviously
much data, so I'm not going to bother to look at the monthly chart because we've only got a couple of years worth, 3 years worth of data. We can get a better picture on the weekly chart. You can see how a nice move has unfolded, Courtney, and now it's in a nice uptrend. This is the sort of stock that, not everybody's going to like this particular stock, but it's a better stock than what we just looked at because it's in a nice uptrend. So if it takes out this high, it could be really good news for Domain Holdings. So if you're holding the stock, then you would be looking at how you're going to sell it or how you're going to manage your risk. Because right now, from the current price, the nearest trough on the chart is 20% away. So you need some good rules on the weekly chart to be able to manage that through. And Dale's book talks about a trend line. I'm not suggesting that this is the best rule for it because that's something that you've got to test. Now I've just lost my trend line. It's in no man's land.
Yeah, what happened?
Yeah, it's just gone off the page. And so when you're bringing the trend line up, you can still see that there would be a bit of slippage coming down if we went with the trend line. So these are all the things that you've got to consider, like how far is the stock currently from this line, and it looks like it's going to be about 10%, 9.7%. But when you're trading more medium term, you have to be prepared for the stock to unfold on the downside. You see here, look how far it fell, but in order to get higher, it had to come lower. So, you can't have your cake and eat it too sort of thing. You've got to, if you're going to trade, you've got to be prepared to let the stock run and have some good rules to back yourself up with. So right now it's looking like a nice stock.
Okay.
CGF.
Yep.
CGF, Challenger, a stock that I like to follow. It's very interesting. Challenger have had a hard time with the annuity side of things, but they've managed to get some annuities onto different platforms, which is interesting, but still no commitment to the move. I mean, it's still sideways. And when you see a little apex like that forming, I'm just going to draw.
This is from E. Corso, and he's asking
Okay.
whether this is good to buy now, and I can't see that it is.
No,
That's my
because
answer.
people will be trying to second guess whether it's going to go up, and that's what you're doing, guessing rather than having confirmation on your side. So at the moment, there's this. It's heading towards an apex, and eventually you get a breakout, which determines, that one way or another, the buyers or the sellers I got tongue-tied, win the tussle. But we haven't seen that happen yet. And I'd be really wanting to see a nice move up out of that sideways zone before, because look at the closes and the opens on the last few weeks. It's all the same, isn't it?
Narrowing, isn't it?
It is narrowing. So stay tuned for this one. But, I wouldn't be putting my money on it just now. I'd be wanting confirmation.
Yeah, I would be too. So, but
okay, now we're moving ahead.
So we've got all of that. So we're moving ahead. So now the topic for tonight's show, what we wanted to explore, is the best stock selection criteria and the strategies. So what I did was this afternoon, I sneaked away from Janine, jumped into the recording studio because it was nice and quiet to record a video on my thoughts, and I thought it was easier for us to do that. So let's play the video now, and then we'll come back into getting into some more stocks when we come back. So let's have a look at the video now. Okay, all too often people think about the best stock selection criteria is about going to the nearest chat forum or the most popular chat forums and finding out what other stocks people are talking about. But as you're going to find out on this little presentation that I've put together today, you'll find it's a hell of a lot more involved in selecting the right stocks for your portfolio. But the first couple of things we need to look at is you need to identify the goal of your portfolio. And the goal of your portfolio is going to be influenced by such factors as the time you have available to manage your portfolio. And often I find people are very incongruent with how much time they've got to the stocks they're actually trying to manage. The second thing is you need to know whether you're looking for cash flow or growth, or both of those within your portfolio. So are the stocks you're looking for supposed to generate cash flow, or are they generating growth, or are they generating both of those? So you need to have a look at that as well. Also, the next bit you're looking at is your tolerance to risk, and I find a lot of people get this wrong. And we talk about this week after week after week about the styles of stocks that people are choosing and the risk they're taking. And a lot of people don't understand how much risk they're taking with those individual stocks that they're actually looking at for themselves. So you really do need to take this into consideration. The next point we need to bring up is the total capital you have available, and a lot of people think that if they've only got a little bit of money that they should buy the lowest price stocks on the market so they can make the most amount of money. And really the inverse is actually correct here, is if you don't have very much money, there are better ways to start your portfolio and better stocks to select for your portfolio. And these are the sorts of things we talk about from week to week here on the live show anyway. So next we get into portfolio construction. Now, portfolio construction this is all in my book, Accelerate Your Wealth. So if you want to understand this a hell of a lot more detail, get into my book, Accelerate Your Wealth. But looking at this, you're seeing, first thing is the number of stocks or how many companies you intend to buy for your portfolio. You need to know that. You also need to know the position sizing or how many shares that you're going to buy. So how are you breaking up the money that you have for your portfolio, and how many stocks you're buying and how much of those stocks are you buying? I see a lot of inconsistencies here with portfolio construction. The next point is stock selection. Now we're starting to get into which companies you're going to buy, because the companies you buy for your portfolio need to suit the goal of that portfolio. It's no use buying stocks that don't suit that. For example, a super fund portfolio will have different stocks than a high growth type portfolio. The next bit, we're getting into stop losses, and that's another thing that Janine and I constantly talk about on the live show and whenever we're talking with investors and traders, is making sure you keep the capital. People are really good at bringing money in, but they're not really good at keeping it, and setting stop losses really helps you understand how to keep it and making sure you are trading with the lowest amount of risk. Now we're getting into stock selection criteria. Now we mentioned we're going to talk about fundamental analysis and technical analysis. These two forms of analysis are there to help you look at what you're buying, why you're buying, and how you're buying it. Now, when you're analysing stocks, we find a lot of people get all of these sorts of analysis methods wrong, and they're more buying or using the buy and pray method that I talk about. They do wishy-washy research, I suppose, is probably the highly technical term that I have, and they guess more than have solid strategy. So with fundamentals, what we're talking about, it's value investing, and this is what Buffett actually does, is value investing. Now, which stocks are over or undervalued in relation to the current share price? And value investing or fundamental analysis teaches you or alerts you to what you should be buying. It doesn't tell you when to buy and sell, it just tells you what you should be looking at to buy. Now, the criteria that we use, we have three main criteria. The first one is earnings per share. I won't explain it to you, just Google earnings per share and that'll tell you what that is. But really this is a sign of whether you're buying a growth stock and it's likely to grow in the short, medium or long term. So it's a real critical metric that we actually use. Dividend yield of the company is the second one, and the third one is price earnings ratio or PE ratio. Now with earnings per share or EPS, we're looking for double-digit growth here. If we're looking for a medium to long-term portfolio, we're looking for 2 years plus. If we're looking more short-term, we're looking the next 12 months in their EPS and double-digit growth here. PE ratios, we're looking sort of around 10, 11, 12 for a PE ratio, but these are not hard and fast rules. Dividend yields, depending on whether we're buying into a super fund or a growth fund, will change depending on what style of portfolio we're trying to build. But you understand when you look at these three metrics, it tells you what you should be looking at to buy, what's looking to be a good stock to grow into that next short, medium and long term that you're looking for, depending on the style of the portfolio that you are growing. Now that takes us into technical analysis, and obviously there's a plethora of things that we can talk about here. Lots of tools, there's thousands of indicators and a whole range of different things, but keep it simple, and that's what I always push, whether it's in my book or in our courses. Keep your analysis simple, because I find a lot of people get into paralysis of analysis because they're doing things they don't understand and they're not using solid techniques and solid analysis. And it's surprising, most people are surprised to know that Janine and I don't use technical indicators or computer-generated indicators in our trading, and that surprises a lot. But when we're looking at technical analysis, you would have heard me say a few times, price, pattern, time, price, pattern, time. That's what Janine and I do all of the time. So when we're looking at charts for you on the show, we're looking at those three things all at the same time, using our knowledge and experience. But technical analysis tells us when to buy and sell. So it's about timing the entry to get in and get out. So fundamentals, what we should be looking at. Technicals, when we should be looking at it. Here, the three main criteria, or the main criteria we use is direction. Number one, you should always do is look at direction first. And again, we see huge mistakes in this area. Now, is the trend up? Is the trend down? How do you measure that direction in being up or down? There's tools, things such as trend lines that Janine and I use all the time, and there's some other trend following indicators that I know some of you guys use, such as moving averages in terms of that to measure what the trend is doing in short, medium and long term. But always go for direction first, and then we'll always say in the show, we're saying wait for the stock to hit a low and start to move up before looking to buy it. And again, a lot of people don't do that. They just see a stock hit a lower price and go, yeah, I'll buy that because it's cheap. Not a good reason to buy. So direction is number one. Number two is strength. How strong is it? And that's really another critical factor. And again, most people don't do that. What is actually price doing? Is it finding some support? Is it showing you that there are more buyers than sellers? Is it showing you that there's lots of strength here? Now here we have a lot of tools that Janine and I will use, and some of those are price projections, retracement tools. We use Fibonacci and a whole rather Gann tools that we would use here to analyze direction and strength of a move, and measuring how far it's likely to go if it travels up and how far it's likely to go if it travels down. Can't get into detail on how we do all of that, but again, some of this stuff is in my book, Accelerate Your Wealth, and it's definitely in the courses that we have. And lastly, I want to talk about pattern. So we talk about price, pattern, time. Pattern is really good. So a lot of people use things like candlestick patterns about reversal signals. We also use things such as Dow theory. We also use Elliott wave theory, reversal signals, reversal patterns. All of those things help us understand direction and strength, or likely direction, likely strength, how far a stock is likely to rise and fall. They're all different areas that we put into our trading. And one thing we always do is use all of our knowledge, all of the time, not just some of it. So that brings it to the end of my take on selecting the criteria for stocks. Now, obviously, I couldn't go into a lot of detail into everything, but I'd suggest you buy my book, Accelerate Your Wealth. It's Your Money, Your Choice, because it goes into that in a lot of detail. And even into getting into our Trading Mentor course. That's our beginner course. If you really want to know a little bit more detail about how to do all of that, we do teach that in there. But that's it for me for now. Let's get back to the live show.
Now, that was really good, and you were just scratching the surface on this topic, weren't you?
I know I was going really fast trying to get through it.
You got a bit tongue-tied, did you, during that?
No, I didn't get tongue-tied because it's all stuff that we know a lot of, but it was just a lot to cover. In fact, I pulled that PowerPoint slides from about a couple of different presentations we've done, and it's like each one of those was an hour long. So trying to condense, a 1 or 2 hour or 3 hour seminar into a couple of minutes is pretty hard. And so, but the video is actually twice as long, and as I said, it really didn't cover everything that I wanted, so I had to cut it down for tonight's show, so just to make it a little bit easier. So if you want to see the whole recording that I did this afternoon, just email us at info@wealthwithin.com.au, and in the subject line just put stock selection and we'll send you the link to the whole video. I'll put it up on YouTube tomorrow morning and have it there for a little bit so you can have a chance to have a good read of it. But if you really want all the detail of how it all works and what I was talking about, just get the book.
That's a good idea. I was going to say the same thing.
Oh, you were going to say the same thing, were you? So what do you want to say this little bit?
You go.
Okay. So I know I keep skipping ahead, don't I? But I think as we've got time, we get back into the stocks and everything else. I know we've had a lot of I know that's what you love, the charts. So, but we've had a lot of good comments from people. Thanks for all the nice comments about our videos and the show and everything else. I can't answer you on the text while we're doing this show, but thank you very much for that. So I appreciate the great feedback. Hopefully you liked that recording too, and tell us what you want.
I thought you were really generous putting that information up there.
Well, I think it's really, people wanted that sort of stuff, and as I said, I really wanted to go into a lot more detail, but you can't on YouTube. It's not possible.
No.
We need to really pull things apart and teach people properly. But
if you're serious, then you're not just going to try to learn on YouTube. You're going to do a course and say, well, I'm going to commit to this and I really want to be successful and set goals and achieve them.
Yeah, I had a guy only about a week or two ago, and he said, what I like about you, he said, I've been to lots of share market educators, and they tell you they teach a whole lot of stuff, but all they teach about is just really, really high surface level stuff. He said, you actually teach me properly and really get into the details so that I really understand what I'm doing. And that's the bigger difference. So he's a new student of ours, and he said, this is chalk and cheese to what we do. And to me, that was just high level stuff. It just really wasn't a lot of detail. But
so should we go into the stocks?
Let's get into the stocks. Otherwise, we'll go on forever, won't we?
Okay. So looking at your screen there, you can see we've got BSL, and that was from
Kayon.
Kayon?
Yeah, okay. He's asking if it's a buy.
We did actually have another stock there, but some of these stocks we've covered in, I don't even know if we covered BSL last week. I think we may have, or we covered Origin last week, so it's important to go back and have a look. But looking at what's interesting on the monthly chart is look where BlueScope is right now. Now, this was the low that formed just after the stock was actually, this is the data that originally came with BlueScope, but BlueScope actually was demerged at some stage. And looking at the data way back in 2002, you can see there's a low there. There's a low here in March, and there's another one here in 2010. So that one was 2009. And this is roughly where the stock is coming back to now. Now, it looks bearish to me because it's taken out this low. It doesn't mean that it won't find support here temporarily, but you won't know for probably a couple of weeks to a month or so, whether it's actually going to recover from here or not. Because the next level it could come down to is below this $10 mark. So sitting and waiting now, I'm just sitting back, waiting for the right opportunity, not wanting to rush in, and waiting to see if it does come back to around this sort of level to get the better opportunity.
Does this correlate with BHP movement? Because I know it was part of BHP.
No, not exactly. I mean, this is much more volatile. So I can put BHP up later, and we can. You can actually do what's called an overlay chart. I know you don't want me to get into that right now, but I can show you that next week how we can overlay one chart over the other, so you can do a quick comparison on how the stocks perform. It's a bit like the spaghetti chart, only it's just overlaying one over the stock.
Yeah, I know we overlay the US Aussie dollar on top of BHP quite regularly.
So let's have a look at coal. That's the next one, coals. Now, we know we don't have much data on that, so look, I'm not going to bother to sit on the monthly chart for now because you won't see much anyway, just a couple of bars. But looking at this, it looks really strong at the moment. You can see this pullback here. Now, generally when we're trading, we like to have at least 2 or 3 years of data, because what can you do with this amount of data? You can't analyse it to determine any set of rules to use because there's not enough history, there's not enough of a record of the decline and a rise to work out where the stock's more likely to run. So it's really trading with all, this is called the art of trading. If you trade a stock based on not having the data, it doesn't come down to the big picture analysis. It comes down to what you're thinking about it. And it is a short-term decision if you're looking at a stock with this amount of data.
Well, this is where your fundamental metrics would come into play a little bit more.
Yeah, absolutely.
Because I know fundamentally this was looking pretty ordinary a little while back, obviously, and that's part of the reason why it got split off, and it's been joined with Myer, it's been joined with Wesfarmers. It's, now it's getting its own feet again. So I think fundamentally you need to look at it from that point of view first and foremost, and then look at it from a technical point of view. So,
that's a
but
really
it is looking
point.
good.
Yeah, so it's looking good at the moment. I mean, if you have the shares, there's nothing on the chart telling us that it's time to sell.
This was from John. So thanks, John, for this stock.
But let's have a look at how far it is just quickly. Like current price down to this trough here is about 5% downside. If it goes through there, then you'd be really concerned about it coming back further. But at the moment, it's holding steady. All right, we've got time for one more.
We've got Flight Centre now. I think it is Flight Centre from Jonathan. Jonathan actually says, where is it, John? Hi guys, great show and thanks for your effort. Looking for your thoughts on Flight Centre.
Look, this is a stock I really like. It's not a stock that everybody likes because of the volatility of this, and it doesn't always fit people's portfolio strategy. Just because of the way that the stock moves and the type of stock that it is. But you'll notice that it actually traded all the way up to this high at 70.83. Now, let's see how far it's fallen. I'm not saying that just because it's fallen this far, it's an opportunity, because it doesn't mean anything. Stocks can always fall further. But it did fall about 46, 47%. And then again, let's have a look back here at the prior fall. We can see it was about 50. So we know that history tells us that sometimes when this stock falls to around that level, it then has a recovery. It doesn't mean that it's going to rise up and take out this all-time high in August, though. It might only go part of the way. And it may meet resistance at around this $45 mark. You can see from those prior peaks that occurred back here. So support and resistance is a big area that we teach, but you've got to be able to put it together with other price analysis, not just look at it on its own, and that's where the real craft comes into it. So looking at this stock right now, I really like the look of it, but I'm saying right now, it depends on the rules that you've got, whether you would be looking to be entering it soon or already in it. So there's one that looks interesting, which is Flight Centre.
Yeah, it does. Now, we've got a question here. Ian S. is back. He says, hi, Dale and Janine. After a few weeks focusing on some family priorities, I'm back. Can't wait to get back into Module 2 of the diploma. Okay, welcome, Ian. I'm looking forward to tonight's show. He's asking, Dale, in one of your other videos this week, you mentioned buying income-producing investments, such as stocks, to help reduce debt. If you get time, could you please elaborate?
That's all about that margin lending example, isn't it? Like, you showed a great margin lending example at one of our Art of Trading workshops, and it shows that how the dividends are paying off the loan interest, but it really whether you actually make any money out of it, just because it's paying the interest, that wasn't all that was important, because we looked at an example of NAB and how it didn't actually make anything over time, over that 10-year period, remember?
Yeah, I remember the example, but this was more in relation to my market report yesterday for the All Ordinaries Index, because I was talking about interest rates being dropped.
I haven't watched it yet.
I know you haven't watched it, so she ignores me all the time, guys, so don't worry about it. But yeah, saying how interest rate it was dropped to stimulate the economy here in Australia, and I said what people should be doing instead of taking on more debt, which is what the federal government is wanting people to borrow more money to buy houses, and that's why they've got the first home buyers scheme happening, and they want more housing to be bought and sold and built to try and stimulate the economy. And what I was suggesting is, if you've got spare cash, or if your interest rate is lowered, pay it off your home loan, get rid of your debt first. And this is where people have a huge challenge here in Australia. People just love to keep borrowing more money, and we are hugely in debt as a nation and individually, and that's what I talk about in my report yesterday. And you should be reducing negative debt. People buy a house and all they're doing is put themselves into enforced slavery with the banks.
Now, when you're talking about negative debt, would you want to expand on that?
Well, the difference, people think their house that they live in is a positive for them. It's just a lifestyle choice. The amount of interest you pay on your home loan, plus all the costs of maintaining and managing your home for 20, 30 years, by the time you pay the home loan off, it's all been taken, all that extra asset that you have has been sucked up in interest and everything else. So it's enforced savings.
So non-deductible debt
So it's non-deductible debt, and negative debt to me is credit card debt, car debt, anything. Yeah, well, your home loan to me is negative debt, and that might surprise a whole lot of people. So what I was suggesting is what young people should be doing is actually going out, and if they want to get into the housing market, buy a good rental property and use that money and live where they want to live, because often people can't afford to buy where they want to live, but they can afford to rent where they want to live. And so do that, and then put your money into a rental property and use the tax deductions and everything else that the government gives us to do that. You'll be far better off. So buy income producing assets, which is what Ian's asking about. Shares are income producing assets. Why don't you buy Telstra or you buy Commonwealth Bank, and you're getting really high dividend yields on both of those stocks? Now, if you go at them
at the right time.
At the right time, and then if you save some money up and you've got some extra cash coming through because your interest rate on your house has dropped, and maybe that's saving you $100 a month or $1,000 a month or whatever that price is. If you go and buy things like Telstra or those sorts of high income producing stocks like Combank, then that money's going to come in. The stock price is going to rise if they're on a bull market. So if you're getting rising stocks, they could be making you more money out of your money, and then once you sell those, you can then pay down your loans. So you actually pay your loans off a lot quicker.
So some people have offset accounts. So
Correct.
what you're saying is that, depending on what they want their strategy to do, the theory is that they could take the money from that offset account, put it into some good growth shares, and then that will work harder than their offset account. Is that what you're saying? Yeah, that's what I'm talking about. Is your choice is you put it in a bank account, you earn 1% or whatever it is, or you go and buy income producing assets now. And people are surprised when I say that I've not paid in 20 years. I haven't paid interest to the bank that hasn't been tax deductible. I just don't do that. And that's how do rich people get rich, and you don't do it either. So it's how do rich people get rich is by using the laws that are there to help us accelerate our wealth. And it's about thinking smart and saying, okay, where do you want to live? How do you want to have your debt? But if you've got car loans and personal loans and credit card debt, most people, the average Australian has 2.5 credit cards. Like, seriously, I got one. Don't get into that trap.
I got one credit card for personal and one for business. That's it, and they don't mix. And both get paid off every single month. And if you get into that debt cycle, you'll always be chasing your backside trying to keep up. And, paying 19, 20, 25% interest is just terrible. So redo all of that. So that's really what I was talking about, Anne.
Well, thank you for that.
That's okay. So we can get back into what?
Yeah,
what do you want to do?
I want to talk about something.
Oh, you want
else
to talk
now.
about something? Okay. Sorry.
Is that okay?
I'll just keep my mouth shut.
We won't do the ventriloquist dummy again, will we?
I'll get my hard hat.
Last week we mentioned a great opportunity that's going to get you on the right path to becoming consistently profitable in the market. Tonight we just wanted to remind you of what that was. Now that's right, Dale. We're getting lots of great feedback on how much people are learning from watching the show.
I know, heaps.
And how we've changed others' lives. And last week we mentioned that we're running an end of financial year special offer, and everyone can enrol in the diploma course with this offer.
Everyone?
Well, look, there's no real barriers to entry given the way that it's, what we can offer them. We've done everything we can to make this
interest-free loans,
available,
payment
really.
plans, you name it. There's no real excuses there.
Yeah. So, but you have to enrol before the end of the month. So those enrolling will receive not only the education in the diploma, share trading and investment, which is an amazing course. And the thing that always makes me proud of that course is the fact that there are defined outcomes from the course.
Oh, yeah.
So that's the difference.
What's
You
it
have to
guaranteed?
actually prove that, you guarantee the knowledge that you'll get. You actually have to prove that you know it when you're getting through it. But we support you all the way, so it's not like we're just going to leave you there. It's not that type of course. So look, you get 48 weekly issues. So there's a stock report that we run, and every week we talk about different stocks, like we're doing tonight, but in a lot more detail.
People pay a couple of grand a year just for a stock report. We teach you how to trade and give you a stock report.
Yeah, I mean, it's like that feeding the fish, teach a man to fish and you'll feed him for life, or just give a man a fish, and woman. Don't want to be sexist,
Being sexist
on the show.
Cool. Keep going.
So the stock report, as that alone's worth the tuition for the course, and I'll say that without even a quiver, it is definitely worth it.
Well, enrolling in the course means you also get full email support from our team, so that you can work one on our expert team of traders. Now, these people don't work full time for us. They're traders themselves, and they support students, so they work underneath me and with me, overseeing everything. So you have access.
They've done the course. They know.
They've done all
what
the
goes
course.
on
They're graduates. They've gone through the same things that you're thinking of and you're apprehensive about, and they've overcome all of those.
And they're passionate about supporting you.
They are. They are. And you get to access all of our online forums. There's a whole lot of recordings. There's the hours and hours and hours of those as well. Plus the Optima software that we use every single live show. So we're using that tonight, along with a lot of extra data that we've organised specifically for you. So to give your trading a further boost, we're offering you a one-on-one session with Janine. And this is absolutely priceless, as Janine and I never do these. We really don't do one-on-one sessions with anyone. So
I have done a few with the advanced guys, and ladies, the advanced group.
That's a real
not
supercharge
usually
to
at the
getting
diploma.
started through the course and getting really, really trading. So what is?
Well, look,
so,
you can actually choose when we have that session. Doesn't have to be at the start, because
Well, it doesn't have to be. No.
yeah, you might decide, well, I'm going to pick her brain when I get to right near the end of the course, so that I've absorbed as much as I possibly can, and then I've got more questions to ask her. Or you can get part way through.
So what do they have to do to get started then?
Well, simply contact the office and ask for, make an inquiry. You can send in an email to us. It's up to you. But look, having a chat is often better, because you can get your questions answered over the phone. So simply call 1300 858 272 or email info@wealthwithin.com.au. So when you call, just remember to ask about the interest-free payment option, which makes getting started on your journey to trading success even easier.
Yeah, I never thought I'd say this. Let's get back to the charts, Jane.
Oh, yay. Okay, come
So what do we got now? We've got Telstra. Gigi. Telstra.
Okay, now looking at we've
We
talked about
haven't had a
Telstra.
Gigi before, have we?
We've talked about Telstra as well, or I might get him mixed up with our traders forums.
I think you're getting mixed up with the trader. We look at so many stocks for people.
Now, Telstra, looking at it, so far this week it's gapped up a little bit. So it may be getting to a little bit of an exhaustion space, and that's not surprising after last week's big move up. So in the last couple of weeks, it's actually done quite well in terms of the rise. Let's have a look at what it's done. So percentage-wise, if we started from back here, it's actually risen about 8.5%, which is really good. Now, it's at a resistance level right now. So I talked about it, I think, I didn't talk about it on this show, then I have talked about it with some of the traders who are probably listening tonight. We've got a level that it's jumped over back here. So you can see that level across there at about $3.50. There's another short-term one here just under $4, and then the next one is above that, somewhere around the $4.10 mark, $4.15. So if it does go all that way, then it's still got a little bit of upside, but it could have a bit of a pullback. It is due, given it's had 1, 2, 3, 4. This is the 5th week up, but Telstra can go on for like 6 or 7 weeks before it does pull back. So it remains to be seen. But if you're in the stock, you'd just be thinking, well, how am I going to manage my risk? And this is part of the trade management side of things. So when you're in a trade, you've got rules to get in and you've got rules to get out. Now, but when you're in the trade, different things can happen to make you wonder, well, how should I be handling this? Because you see, right now, you may not be able to get a trend line underneath all that, depending on whether it met the rules. So let's just say, and some of you out there who know the rules will be having a look to see if they can, but if I don't have a confirmed trend line there and I'm a fair way from that line, my stop loss is going to be a long way off from the line. So, here you go. You've got about, 10, 12%. if it were to come straight back, you know.
But depending on the stock, that's okay. And I know a lot of people
For a
that aren't-
medium-term trade.
Yeah, but I know
There's
a lot of
people are afraid of that because they're just not
Correct.
trusting rules.
That's what I was about to say, is they don't trust their rules
Yeah.
and strategies, and they see a stock coming down and they start to panic and they go, oh, what am I going to do? And that's because you don't have solid rules and you don't trust the rules or yourself to enact those rules.
Actually, someone sent me an email, I think it was last week, and it was about a stock that had done similar to this, and there was no trend line. You couldn't draw the trend line on it. And I said to him, well, what are your rules? And because he's got rules, which are trend line rules, but he could, if it did something strange and out of the ordinary, he can use all he knows because he's done other back tests on different rules to find out what works. So he knows the results of using other rules. The alternative thing is to trust the rule and wait for the trough to form, which it's uncanny. If you go back and look at the history of the stock, how many times that third trough will form and give you a decent exit depending
I've
on
had
the
trades
stock.
where I couldn't get a valid trend line up underneath the stock, and you know, I'm going, it's just been going vertical, and I've made 200% on the stock, and then all of a sudden it gives me my confirmation point, my last trough that I needed for my trend line. Then 2 weeks later it's gone below my trend line. I've sold out for a massive profit, but it's just gone vertical in the meantime. And people aren't, because they're not drawing enough practice from applying solid rules and tools. They don't get to
they're not
trust
familiar with that.
They're not familiar
So
with
it looks like, oh, this is something just out of the ordinary and it's not likely to come back and give me a decent exit point, but it often will.
So it's about having good rules and
Yeah.
practicing those rules and trusting what you're doing.
So Harvey Norman, look,
Yeah, this
interesting.
one was Rosie, I think, wasn't it, Rosie?
Yeah,
she
look-
said she's owned it for a while, I think.
Yeah, well,
Yeah.
a while could be anywhere. So is
She
it?
said a number of years, and what
okay.
do you think it's got further to go?
Yeah, so you would have been through a bit of a roller coaster
Yes,
on
you
the
would have
stock
been.
now. So it's looking much better now. You'd be quite happy with where it is, but that's why you don't hold for the downside, because the risk, say you bought it a few years ago, downside potentially from there to here was about 32%. So all of that time, you could have put the money into somewhere else to get a stock that's rising, and that's the point of the stop losses. But look, now it's recovering, looking nice. There's a nice trough, which is always reassuring, isn't it, to see that higher trough here form in May, and then it's continuing on. Let's have a look at where we can see some interesting points on the stock. So looking over the history of it, we can see there that
pretty important
it's
level.
right near a very important level for the stock at about $4.50. So, you know, don't be surprised if it does slow down. It's not a signal to exit. Just because a stock's reaching a level of resistance doesn't mean you jump out, because you could be completely wrong in doing that, and it just keeps going. So let the profits run is the motto.
I think staying with it's the operative word right now.
Yeah, and the weekly chart's giving us higher swing lows with this move down here in the start of June and moving up. So it looks good. The risk looks relatively low at this point in time.
Cool. We got a question here. We don't need to bring up the ASX 200 monthly
Okay.
chart. From Kurt, he says it's through the top of Bollinger Bands. Where to from here? Both Janine and I are bullish on the Australian market. We've been bullish for a long, long time. We don't use Bollinger Bands at all in our trading, so we both think it's going to go through the all-time high. Hopefully in the next few weeks, but it might take a little bit longer. But I think July, we're going to be moving up into July, maybe coming down for a little bit after that. But I think we both think that by the end of the year, the market will be higher than it is today.
Yeah.
Quite a great deal higher than what it is today. So that's pretty much our 2-second thought on it. We also had, who was it? Chris asked us about RRL. I can't even say that. RRL. Sound like a dog, don't I? RRL. We already did that at the start of the show. You had to tune in early to see it, mate. So
You have to
go
watch
back
the
to the
recording.
start and watch it all again. A few other nice little comments from here. We've got Mick King says, hi again. I took profits on Seek a while ago and sold around $21 and it then fell to 17s. I felt like a genius. Well, you are a genius. You made some money, matey. It's rebounding and wondering what your views are currently. Oh, I'm no genius. So let's have a look at Seek for you, Mick.
Okay then. So looking at it, it looks incredibly strong right
Does
now.
look good, doesn't it?
It's just rocketed ahead. What's interesting for some of the advanced students is because we look at the big picture pattern that the stock is on, and it actually did look like that this was topping out here in September 2018, and this was the first move down of what could potentially turn the stock around on the downside. I mean, Seek's sort of expanded its business tentacles, if you like. And so that's all may be coming to fruition. What they've done in China might be coming to fruition.
Would you be buying right now?
No.
Okay, that's the question.
Okay, so if you haven't bought it when it was trading through here strongly in May, then that's probably too late.
Well, it's too close to heavy resistance right now. We need to make sure that it's going to go through that.
Yeah, look, that can always be a challenge. When stocks trade towards their all-time high, they'll either pull back just around or before the all-time high or just after. So that you've got to really consider that risk in the process of selecting the stock.
Okay, so we got Neil wants ECX. So
okay, ECX is an interesting
one. His name's
one.
Neil Baby, so cool. Hi Dale, what are your thoughts on ECX?
Okay, Neil. So Eclipse Group, looking at that, now this is an interesting pattern. It formed at the top. So it hit highs twice at $4.30 or thereabouts, and then has continued to fall down. Now, how far has it actually fallen? Let's have a good look.
Pretty big fall, isn't it?
Yeah, it's actually had a
90%,
rocky ride. So don't ever think that a stock can't fall like to nearly 100% of its highs when it's trading.
Do you own that, Neil, at all? Because you don't actually say.
So looking at it now on the monthly, it's actually had a couple of months up off the bottom while we're waiting for Neil to come back. A big gap formed on the way down. Now, often this can happen because of negative news that comes out. Look at the volume that happened when it dropped, and then the stock is trying to recover again to fill that gap. Now, how long that will last remains to be seen. At the moment, it's looking quite good, but I just wouldn't be putting my money into that share.
No answer from Neil. So Hans H says, decade full of you, Dale and Janine. So much knowledge gained watching you live from Bali. Well done, baby.
Wow.
I'd love to be watching me from
Dale
Bali
would
too.
like that.
Can't even miss an episode here. Great working through your new book, Dale. Great refresher to me. So welcome, Hans. Great. Next stock is RWC by Gav. Not
okay, I think
by
I'll have
Gav,
to type this one in.
For Gav. Where's Gav there? So Dale, your videos are the best. Oh, thanks, Gav. Insights on RWC.
Well, you know he's going to answer your stock when you say that, don't
Oh, yeah, Dales, you're a good-looking stud man. So he's the stock
No,
I
I
want.
think this is going a bit too
A bit
far.
too far, okay. I'll pull it back a bit.
Okay, thank you. All right, so we've got, now let's have a look at how far this one declined from that high. I really like to look at these falls.
Another
Now,
50%.
47%. The rise from the all-time low up to the high was 145%. So just to give you an idea about the volatility of this share, it's quite incredible. But remember how we looked at stocks that were going sideways and all of a sudden this one's fallen out of bed? Well, that can happen quite often, but you've just got to wait for the confirmation of direction to confirm which way it's going to go to keep you safe. So looking at the weekly chart, just going to compress that up, you can see the resistance that occurred across here. Look, a lot of people would have been buying it up here, and there would have been broker calls on the stock. I can tell you that without even checking. And then, of course, the little people get caught out and the stock pulls back. So looking at this, I mean, it's not, it's nowhere near looking at ready. You got what's the price there? Close 364. Yeah. Still part of a sideways move, so.
Not way too well. If you don't own it now, stay out of it. That's pretty much what she's saying.
It just looks ugly at the moment. Yeah.
Okay, next one is Ben Mills. He's looking at Ben, so a regular on the channel. IFL. So Ben saying, hi Dale and Janine, love the show. Just wondering, can you guys have a look at IFL or IOOF Holdings?
Sure can.
And QB Insurance. I think they're undervalued. With good growth opportunity, what do you think? We'll do IOOF. We can't do QB. We're running out of time tonight for all the stocks.
Now, they may be undervalued, but at the moment, is the big money going into this stock? And the answer is no. So you can see here there's no real activity happening and even if it rose for a couple of weeks, that still wouldn't be enough to convince me that it's going up yet. So if you're wanting to wait for this, I'd say it would be some months off before you'd even get a decent rule.
This is a perfect example of what I was talking about in my video, because I was saying fundamentals teach you what to look at, not when to buy and sell.
Correct.
And so whilst it's undervalued, that's saying have a look at this because it is undervalued. So for example, let's say round figures, it's $5 right now price, and let's say it's valued at $7, that's saying, oh, look, I should be buying that because it should be trading at $7. But who's valued it?
And why are they valuing it at that level?
Correct. But it's not telling us to buy that. And so if we were just pure value investors, we would look at buying that sort of stuff.
But not only that, I mean, the GFC, there were all these value cries that were happening after the market had peaked and it was falling down. They were saying everything was cheap.
And it still
and
kept
a lot
falling.
of people, that's right. A lot of people got burnt from that experience. So that's why you've really got to back it up with where the money's flowing on the chart. And the money isn't flowing here yet.
No, we looked
So
at
why would you
QB
put
last week,
yours
I
there?
believe, didn't we? So,
Yeah. we
so if
did.
you didn't catch last week's show, Ben, have a look at it. Next one we've got is
Oops, we wanna
Troy
have a look
DXS, if I can say that. I don't think
DXS?
my mouth's not working properly at the moment, is it?
Texas.
Really?
Texas
Troy says,
is-
hi, Dale and Janine, and just doing some paper trading for my diploma short course. Oh,
Wow.
hi, Troy, how you doing? I bought DXS and GPT. Have picked them up via fundamental analysis. Just wondering what you think.
Well, look, the
That
trend
looks
of
nice.
the stock has gone beautifully and it's gone through the all-time high. It did have a bit of volatility around this level. Looks like it could top out at some point through the all-time high, given it's so stretched to me. Look at the angle of the current trend and how far it's moved away from the long-term direction of the stock. But if you were holding this stock, you wouldn't be looking to sell it. You'd be looking to have some good rules on it and have a trailing stop. The nearest low to this stock is about 6.4% away where that outside bar is. Remember we talked about outside bars in previous recordings, that it's actually like it's a move down and then a move back up quickly. Different to where you've got an isolated low where you've got this red bar. We teach, that's one of the things that you've got to really learn before you learn to trade with rules. You need to understand how to read the chart well. So that's Dexus, that looks really good.
One more stock quickly. PME for Lily. That's it. That's the last stock we're going to get
Did
through
we help
tonight.
Rosie? What was Rosie's stock?
Rosie. Was that Rosie one? Rosie, we did Harvey Norman for Rosie.
Oh, we did Harvey Norman, okay. So Pro Medicus, I don't know how to say it. Do you want to have a go? PME, how's that?
Medicus.
Medicus?
Pro Medicus.
Okay, so we've got a stock here that's just gone vertical. Now, what do you do with a stock like that? Well, on the monthly chart, there are no higher troughs anywhere near the current price action. It's gone through $20.
Lily's also asking whether it's, she said, hi, Dale and Janine, like healthcare stocks on both PME
But
and
I wouldn't be
CEV.
looking at buying a stock that's
No,
so
she's
stretched
saying,
at this
do you think
point.
it's wise to keep buying more of these at the moment? That's the question.
Look, there are calls you can make when a stock's rising called adding to a position. But this is a trading term, so experienced traders will look to add to their position, but it's about risk management. And I think this is where we talk about it, that it's a high risk to add. Some people will double up. Big mistake to do that. But it all depends on the quantities that you're adding, which I don't think.
The issue we have is, let's say you've got 1,000 stocks in this right now and you buy another 1,000 stocks. If this starts to go down from where it is, every dollar it goes down, you're losing $1 off the profit of the ones first 1,000 you had, because you're losing the dollar off the ones you've just bought. So it's about balancing out risk versus reward, which I talk about in the video a little bit earlier. So right now I wouldn't be adding to this. We tend not to add to positions unless the stock has really shown us it's strong and that we have a high probability of making a lot of money out of it, or good. That second position or third position is making a lot of money. So I'll be looking at something else rather than adding to this. What's your thoughts?
Yeah, I agree. Look, I'd also be looking to see whether it's slowing down. At the moment, it doesn't look like it is.
Well, it's
because
going vertical.
showing-
Look at it.
You've got 3 weeks up and a week down, 3 or 4 weeks up and a week down, 3 weeks up and a week down. So that's still showing that it's strong. So I'd be really carefully watching it now to see what it does from here. Okay, so that was PME. Is that it?
No, that's about all we've got time for. We're basically we're actually running out of time at the moment. So for those guys, Mick and Too Many Fries and Adrian, sorry we can't get to your stocks at this point in time, but we're getting to that end of the show, aren't we?
We are. So if you've enjoyed tonight's show, remember to share it on your social media with your friends and colleagues, and you'll be helping someone else, remember, to learn each week.
Let's go for a record next week. Let's get a
Yeah,
whole
come
lot
on,
more
everyone.
people on it.
Yeah, let's get a big crew. So send out your messages on your own Facebook or social media and let them know. Also, make sure that you put this show in your calendar and be back online next week at 7 p.m. on Tuesday. If you cannot be with us live next week, remember that we're happy to receive your questions anytime. So send them through to info@wealthwithin.com.au and just type Wealth Within Live in the subject line.
Oh, well, Jane, that really does bring us to the end of the show. Hope you
we
enjoyed
could-
it
we
as
could go
much as
longer,
well.
couldn't we?
Oh,
But
look, I love doing
Does
this.
it have to end now?
No, that's what I keep saying, but my wife keeps saying, what are you doing? Giving your time away like this and spinning it here. But we love spinning it with you. We love your feedback. So everybody that's posted on the chat forum tonight, thank you very much. For those of you who are new, this is your first show. We really do hope you enjoy it. Please give us your feedback on it. Again, post down below in the comments section tomorrow. The video will be there for you. So as always, thank you for taking part. And we hope to see you again next Tuesday at 7 p.m. But for now, goodbye, good luck, and good trading.
Good night, everyone.